Just a brief note to say that we are still looking to do these investment videos remotely. Hopefully, in the not too distant future, we'll be back to face-to-face meetings with the investment managers. I do hope that you're enjoying the content, and if at any stage in the future you'd like to ask us to cover specific topics, then please be in touch. But for the time being, please enjoy the latest investment video update. Thank you. Hello everyone, welcome to the latest TM Brunsdon market update. I hope that you're all keeping safe and well as we adapt once again to the changing world of COVID. And it looks as though this will be with us for some time to come in one shape or another. I'm pleased to have with me once again Mark Shields, investment manager from Brooks Macdonald, who will be discussing some topical issues. Welcome, Mark.
Hi, Brian.
Thank you. Mark, two questions today. A number of clients ask about Bitcoins and digital currencies. I just wonder if you might just explain what they are and your approach to them as an investment manager, please.
Yeah, I mean, this is a topic that could take up a substantial amount of time, so I'll try to be as sort of succinct as I possibly can be. I think the first point to make is that Brooks Macdonald, had a discussion some time ago regarding the possibility of including assets such as Bitcoin and possibly some other digital currencies in our portfolios, and we decided not to. We felt that they are very speculative assets, very aggressive assets, or very potentially risky assets, and we felt that we had no particular insight into them that we could utilize in order to maximize or indeed generate strong, consistent alpha for our clients. So I think that's probably the most important point that I want to make is that we don't actively invest into assets of this type for those reasons. Now, obviously, we've seen Bitcoin is kind of the flagship, I suppose. Digital currency is the one that is most widely talked about, widely held, and by far the largest. And it is an interesting asset class. There is a school of thought that effectively thinks that it's an advanced form of Ponzi scheme, which is only really kind of buoyed up by the fact that some people are willing to pay for essentially what an asset which is nothing really. That it is a digital token. In theory, there's no physical asset or anything like that backing these tokens up. So there is one school of thought that thinks that this is a real kind of almost like a scam. There's another school of thought who think that Bitcoin is going to essentially become the new global currency, and at some point in the next 100 years, we'll no longer have dollars, euros, pounds, whatever it may be. It'll all be replaced by a currency along the lines of Bitcoin or something like that. Now, personally, I actually sort of think that both of those are probably wrong. I think that the idea of Bitcoin being a Ponzi scheme is unlikely, just due to the fact that it has been around for a while now. It has been through some difficult times. It has recovered, and indeed, it has started to get significant backing from major global sources, whether that be significant investment banks, or whether indeed that's entrepreneurs like Elon Musk. There's more and more kind of people who are involved in Bitcoin, and who are sort of have a significant stake in it. I also think it's unlikely that it's going to replace sort of what is termed fiat currencies. I think also that is an unlikely outcome. Certainly in my lifetime, at any rate. Maybe at some point in the distant future there would be something else that would replace fiat currencies, but I suspect it may not resemble much of what's in the market at the moment. So my personal opinion is that Bitcoin's probably somewhere in the middle. And indeed, I sort of increasingly feel that it's likely or advantageous to view Bitcoin in particular as a potential replacement for assets such as gold. I mean, gold, yes, okay, it does have a physical backing, but the reality of gold is that it has a notional value. It doesn't really have any use, as it were. There's a very small amount used in jewelry and some industrial processes, but very, very little these days. The only real value in gold is quite simply because of it is what people are willing to pay for it. And effectively, Bitcoin is the same argument. It's a scarce resource. There'll only ever be so many Bitcoins mined, and based on that, I think you can extrapolate an approximate value for Bitcoin of around about $170,000 per coin. Um, the obviously we're sitting at the moment, I think, at around about $40,000 a coin. So potentially quite an upside from here. Um, Again, though, there are a lot of ifs and buts about this. There's a lot of potential volatility. We've seen the price of Bitcoin come off by around about 40% in the space of a few weeks. Um, it is an interesting asset class in that sense. And for a very risk tolerant client or investor, could they potentially put a smallish percentage of their net worth into Bitcoin or other digital currencies? Yes, potentially. But it's not really something that I think we feel we can add particular insight into when it comes to investing for our clients' portfolios. And it's not really an asset that we feel for us is investable, given the amount of speculation that's involved in it, the amount of volatility that's involved with it. So I think the likelihood of us adding it into the Brunsdon portfolios anytime soon is minimal.
Okay.
But it's
Okay.
an interesting asset class, irrespective of that, though. And yeah, I think we will continue to hear about it for quite some time.
Okay. Okay. Money, of course, is as such is a very strange thing, isn't it? Because you know, notes and whatnot, they're only promises to pay, and it does really make you wonder where true value is, doesn't it?
Well, indeed, and of course, the original point of money was that you could take your coin or your note, and you could go to a central bank, and they would give you a corresponding value in gold. Essentially, was what they were back to. But obviously, these days that's long out the window. But that is where it all came back to, was that backing of value. And is there any difference really with regards to the potential for Bitcoin having a value due to being
Mm.
a asset which is rare in the same way as gold is?
Okay.
Arguably not.
Okay. Well, thanks for those thoughts and that insight, Mark. Turn into another matter, the BAM funds. The BAM funds at the moment are performing well, and long may this continue. They are, of course, a selection of funds that you choose, you and your team choose from the investment universe out there to make up our actively managed BAM portfolio. I just wonder if you might highlight a fund or two that has performed well, and indeed why you've chosen them.
Yeah, of course. We have enjoyed a good period of performance in the fund, as you say, Brian, which is great. We've had a more interesting sort of time over the past sort of well, really 2022 to date, really the past few weeks, where we've seen some of the drivers of strong performance, those growth stocks, have rolled over essentially, and have started to fall quite significantly. So, by growth stocks, I mean areas such as technology is probably the most widely known, and benchmarks such as the Nasdaq, which are highly populated by these growth names since the start of the year, has come off around about 6 or 7%, something along those lines, or since the peak of the market around about 6 or 7%. Um, Now we've been quite active in our portfolios to try and balance some of those growth positions with other assets that are more value or cyclically orientated. And these are the sort of funds that I think it's worth highlighting at this point in time, because they have performed particularly well. So again, a lot of people talk about the US and its sort of growth bias. Well, one of our US positions is a fund called the Dodge and Cox US. This is a US fund which is much more focused on the value and cyclical side of the market, and as such, over the past month, it's had positive returns of around about 3%, whereas the wider US market has fallen by around about 3%. And indeed, as I said, the technology side of the US market has fallen even further. So, that's the sort of fund that we have been adding to over the past 12, 18 months. That's the sort of position that we think, is adding to the diversification within the Brunsdon portfolios. And the same goes for positions in the UK. Again, we've very much been concentrating on value and cyclical bias positions in the UK, and funds like the JO Hambro UK Equity Income, that's up around about 8% over the past month. Again, because it's focused on some of those very much unloved, frankly, widely termed uninteresting stocks that have been frankly ignored. And these are the sort of positions that actually, if we continue to see the environment we have at the moment, where focus is on interest rate rises and inflation, they're the sort of companies that are likely to outperform. So maybe a little bit unloved, a little bit sort of against the flow, as it were. But those are the sort of funds that I think are worth highlighting at this point in time, because of the diversification benefits they provide, and because of the fact that we're getting that position, or those investments away from those more growthy names that tend to make the headlines.
Hmm, interesting. Okay, Mark. Okay. Well, look, thanks for that. That's been a very interesting insight into why you choose some of these funds, which, as you say, sometimes they can seem a bit well, unloved, I suppose, is the word that you best use there. Um, Okay, but thank you very much, Mark. Okay, so I'm going to say thank you very much, and I'm going to say thank you very much not only to you, Mark, but also to you for watching. And as always, if you have any questions, then please be in touch. Thank you.